Hello guys, welcome to the market channel. In this video we are going to be talking about the part 2 of using EQ and be profitable. But in this video we'll be talking about structure, how to combine market structure with EQ, and also an entry module you need, you understand, for your entry once price gets to your area of interest or your point of interest. So before we continue, you have not subscribed to this channel before and are watching this video right now, please kindly subscribe and don't forget to share with your friends and smash the like button. So let's continue. I dropped this particular trade APT on the group chat on Telegram. You can join the Telegram if you have not joined this to Telegram from the link in the description. So before I explain, in the last video, you have not watched, you can check it. Last video I was explaining how to buy, do you understand, with the EQ, do you understand, with the equilibrium. So but some people are asking, what about the sell part? I'm going to explain everything now and some conditions you need to know. So let's get started. So first of all, before you look for buy or sell using EQ, you need to understand the structure of the market. It's very, very important. Do you understand me? So if you are looking for a buy, do you understand, that means the market must be in an uptrend. And if you're looking for a sell, it means that the market must be in a downtrend. Do you understand me now? So now what I'm trying to say is that, let's assume we have something like this. Let's assume market was push it down, push up, push down, push up, push down, push up, push down, push up, and change direction to maybe price change and change again. So now what I'm trying to say is this. If you look at it here, for us to take a buy trade now, do you understand, you want to join the trend, looking for 50% treatment or 60% is more like you joining the trend, the current trend. Now the move started from here and went towards this high. Do you understand? What happened next again? We don't forget, before we have this high, we have this previous high before. Do you understand? But what? Price broke this particular high, giving us a new high, showing us that the market is an uptrend. Price pushed down again, give us this low. This low didn't break below this low and gave us a new high, meaning that the market is still now in an uptrend. So because we know that the market is in an uptrend, we want to join the buy opportunity. You can now use your Fibonacci, draw it between this high and the recent low, the recent high and the recent low. Look for the price to push back to the area of 50% or 60% or below. Then look for your entry there and right down with the market, with the hope that price will be going ahead to break this previous high because we are in an uptrend. Do you understand? Price broke again, you draw your Fibonacci from the recent high to the recent low, waiting for price to push down to 50% or below 61%, then drive the price up again with the hope it's going to break the recent high again, which it did. But the moment price fails to take out the recent high, then take out the next high, do you understand? Or maybe sometimes price might be a fake out, do you understand, and return back. So the moment price failed to take out that high but went ahead and break its previous low. Whose phone is that? So went ahead and break the previous low. So that will be a shift of trend. Do you understand me? It means the price is shifting. It means the trend is shifting because price was supposed to break out the next high strongly but went ahead and take out that low. At that particular point, we have shifted towards a downtrend. Do you understand? Because price is now taking out lows. Do you understand? Why is my so as I was saying, as the price went to take out the recent low, do you understand? It means the price has shifted towards a downtrend. If you look at the price, didn't take out this high again anymore. So price went down again and take out this low. It means the price has shifted to a downtrend. So if you want to join the sell trade of this particular trade, you have to take your Fibonacci from this high to this low and wait for price to push back to 50%, 61% or below. Do you understand? Then look for your entry and looking for, with the hope that the price is going to break the next low again. With the price again, if you want to join it again, look for the price to the recent high, the recent low. Do you understand? So price to push back, take out the next low. But the moment price fails to take out that low or doing a fake out, then what? You went to take out that last high, the price has shifted to bullish again. So that's just the ideology you need to understand behind it. Do you understand? So once you understand that particular ideology, it's very easy for you. Do you understand? So let me quickly use this as example, but because time is going, so now you've understand structure now, that you need to understand structure before you can take a buy or sell trade with equilibrium. That's EQ. So now what's the next thing? Now let's take look at it. This particular trade, I drop it that the price push down, push up, tap into this POI and short. Do you understand? And I told you guys to use your confirmation of entry. So what happened? Price tap into this area. Do you understand me? You go to 15 minutes. I'm giving you, I have many different entry modules I use, but I'll be sharing with you a very simple one. Do you understand? To help you. Very, very simple. So you don't need to stress yourself. You don't need to cram anything. Just simple and straightforward. So now what we need to do, we went to 15 minutes time frame, and when we go to the 15 minutes time frame, price tap into here. If with some traders, they will just spend it and take up. But if you want to minimize loss and the rest, you need to look for confirmation on your area of support, demand, or supply zone, or POI, AOI, anywhere, or other block. You need to look for confirmation on lower time frame. So what we do here is that price tap into the area, wait for price was to shift, because when price was tapping into this area, if you look at it, price was shifting bullish. We have this high before. Do you understand? Price pushed down, change direction, but we are expecting price to tap into this area. That's our motive. So before we can look for anything, but as price was moving toward this area, price was shifting bullish. Do you understand? If you look at it, it was creating high, shifting bullish. So for us to, even though price tap into this area, it meant one of our requirements. We can't just go ahead and short. We need price to shift bearish again because we want to go short. And what happened? Price gave us this range and shift bearish. Can you see now? So as price shifted bearish on the same time frame, you can pick up your Fibonacci, draw it from the last high, take it to the to this low. Do you understand? And I told you something in the last video, that in your area of 50% to where you are looking for opportunity, use, if you have a support there, use it. If you have a stance there, use it. If you have other block, use it. Anything you have there, use it. So we have another block here, or we can call it a supply level, a W2. Do you understand? So in which what happened? Price tap into this area. So mainly price tap into this area. If you look at what price did there, I don't want to make this video to be long, so I'll be try and make things quick. So can you start price tap into this area again? Do you understand? So boys, that's another 50% of the FIB. And if you are waiting for it to come below, you can miss this trade actually. So we still look for another one. I will still show you. So and what happened? Price tap into this level. As price tap into it level, don't forget we are on 15 minutes time frame. Do you understand? Then you switch your charts to 1 minute. So what you look for 1 minute, that is for price to give us another range. Do you understand? And take out that low on 1 minute and push back up. Do you understand? Without taking out this recent high on 1 minute. Then what? You enter for your trade at the pushback. Do you understand? That's more like a coach on 1 minute. Do you understand? So that's an example of one. So let's assume now, but you missed this particular trade, you didn't get it. Do you understand? So let's close this. You didn't get it. lost. You are not there. Price didn't tap into that upper area you're expecting. Okay, what happened again? You wait for another break again. So what happened again? Can you see? Price continue to push down. Price tap into here. Price created another this range, went up, pushed down, broke this range, giving us the lower low. Can you see? Price broke this range also, this recent low. Do you understand? So meaning that we want a downtrend. Do you understand? So there are two things involved. You can take price, because if you look at it point as price was getting to this area, it was trying to turn up. So you can take your fib from this recent high, the extreme recent high, do you understand, and take it to this recent low where price was giving a turn. And what will you do? What will you do is that don't forget this 50%. You can, don't forget, I always use below. So, or you can use a 50%, either of the two. So the below that we have here, we have one level here. Do you understand? We have this particular, we can use this green, we have another block here, and we have this one. But look on this one, also looks more extreme and free of liquidity, so we can use that. Can you see? And what happened? Price push to this point, push down again, push up, push down again, tap into it. So as price tap into it, nice one. Do you understand? So price tap into it. We are down, we are down. Okay, price tap into it. So can you see price tap into the level? What we look for now is what? You can just switch to 1 minute time frame, and let's see if it's not going to stress us. So we got there on 1 minute time frame, and if you look at something, as price was moving toward this area, the 1 minute was becoming bullish, breaking higher highs. So what you need to do, wait for 1 minute to shift bearish. Price shifted bearish. You can pick up your fib, this high, to the last lower price start to turn. What's doing? I don't know why I was always doing these tools, always dancing up and down. Okay, so now we have this. Do you understand? So waiting for price was doing this thing. Okay, yeah, done. So we're waiting for price was to push back up to this area. So where is our area? We have two areas to use for the other block. If you look at it, we have one green here, which will cover up to this particular point, and price tap into the area here, and we might have entered here. But if you enter here, you make sure, let's see what our stop loss can be. I entered from the first one actually, so I didn't enter from this second one. That's what our stop loss can be. So we can still get like 1.1% stop loss. That's still very nice one. That's still nice. So to cover this last high, because price might want to dance inside and short, so to cover the last high, and you write it down. So, and at the end of the day, price did from this area, from this second point, if you have to check it, that's something from here. From this second point, that like price did to our area, that like 20% drop. So that's like 1 to 20 half. So that's each money. So that's for that. Let's look at another example before we run and leave this and call it a day. Don't forget to like and share and subscribe. So now in this particular one, let's go to 4 hours time frame. I guess I used this last week. So sorry. So if you look at the structure we have here, price was breaking. I'll be fast with this. It's almost time is going. So price was breaking high. Can you see? Breaking high. So we want to look for buy and join the trend. Do you understand? You pick up your Fibonacci, pick it from this high. We have the recent low where the move that broke this high started from. We have two moves. We have one here and one here. But I would have loved to use the extreme one, which is here. So because this range is not really clear. So we draw our flip tools from this high here to this low here. Do you understand? And what happened, we use for price to push down into it. And in our last video I said you can identify the area of other blocks, support, resistance, and demand zone in the below the region, and which it was this. Do you understand? Price tap into this area as expected, price push down into the area expected. It goes 15 minutes time frame. Sorry, my network. Okay, so we go to 15 minutes time frame. Okay, can you see now? Can you see now? 15 minutes time frame, price tap into this first level, but we're waiting for a break of structure on 15 minutes, but we didn't have that. Price push down again. So you understand, waiting for price to break this and shift bullish. So price push up again and shifted bullish. What happened? You can pick up your fib from here to here, and price was pushed down back. That should be around 50% also, 50%, and what? And price push up. You can enter in 1 minute here. Price push up. So that's just the ideology behind EQ combined with market structure and a particular entry module. Is an entry module where I give you. So if you have any question, you can drop it in the comment section below, and don't forget